Steve, let's start with you, as we should be at pains to point out, just because the price hikes are slowing doesn't mean prices are dropping here.
Right. So inflation is measuring the rate of change of prices. You would need a negative number on inflation that prices actually going down. What has been going down is the aggregate price level, or the change of the rate of change of inflation. So, for example, we were at 9% on headline CPE back in June. We were 9% back in June, and now we're around 6%. Same things happened with the core, from 6.4 down in the 4% range. So, and most of the other price indicators we have, Kelly, are coming down, showing the rate of change is slowing, not that prices are falling.
So you're going up at a slower rate. So, Steve, educate me a little bit on the history of inflation. When we've had bouts of inflation, do prices eventually ever go back to where they were, or even below where they were before that bout of inflation kicks in? Or do the providers, the companies, kind of get accustomed to those higher prices? They don't want to give up those higher prices, generally, I wouldn't think.
You know, sometimes they do, and companies will act to protect. In the first instance, Tyler, I think you know, they'll protect their margin. It's not so much what they're getting from the consumer, it's how much they're earning off of it. So, for example, if they can earn 20% on the dollar of what they invest, they'll move to protect that if they can, and they'll lay off people, or they'll keep prices high in order to do that. The real question becomes one of competition. And there are signs out there, Tyler, that this economy is less competitive than it was in the past. So that might mean that high prices stick around longer, because it's only competition that would force companies to lower those prices.
True. And Melissa, everyone's talking about egg prices, which have one particular catalyst being this avian flu going around. Chicken breast prices, meanwhile, have dropped considerably over the past 6 months. All of this aside, groceries are one place where people definitely go, this is still costing more than it used to, and will I ever see some relief? And what are you hearing?
Well, the good news on the egg front is, yes, prices are expected to come down. I spoke to Kroger CEO Rodney McMullen, and he said that is one bright spot. On the other hand, he said when consumer packaged goods come and they raise prices on detergent, paper towels, things like that, canned food items, they very rarely come back to the grocer and say, actually, we'll lower it again.
Of course.
The way they usually do that is they reintroduce, if they feel they need to, discounts, coupons, things like that help ease prices for consumers. But so far, he said, no vendors have come back to the company to lower prices, and no one has stepped up discounting over a year ago. Wow. So that really hasn't kicked in yet.
Or those vendors will shrink the size of the package and charge you the same amount.
Exactly, shrinkflation.
Shrinkflation, but it's 14 ounces as opposed to 18 ounces.
That's another way it shows up. And so in general, this is something that Rodney told me is going to stick around for a while, and people should be prepared for it. He did say for retailers, one way they can combat this is they can use the tool of private label. So in the fall, Kroger rolled out a cheaper version of private label items, and that's one way they can say when they're negotiating with companies, hey, you may keep the same price, but we're going to offer something that's similar types of peanut butter, and people can vote with their dollars. And potentially that puts pressure on companies to rethink that price.
Although it's not like Kroger itself wants to sell things more cheaply. If they can take the profit margin everybody else is, they're kind of all in it together. And that's Steve's point about competition. So they'll shop around, they'll look for other alternatives and so on. It's not just groceries, though. I mean, this is where it gets interesting. Goods prices fluctuate kind of quickly and sometimes come back down. Services prices, the cost of restaurant meals, especially with the labor market. I mean, that's where you wonder, that's where we've really seen things kind of cresting higher.
Exactly. And it goes to the reason for inflation. Not only did we see a surge in demand during the pandemic because people were stuck at home, but we've also seen wages go up dramatically. And services businesses like hotels and healthcare and restaurants, they're very people intensive. And as they pay higher wages, that's not something they can bring down either. So that becomes a fixed cost as they continue to operate. Plus, they lock in these commodities really early. So they're paying for beef, they're paying for shipping, they're paying for even cotton, and so cotton more on the apparel side, of course. And those contracts are long term, so they can't pass on savings until they feel them themselves.
Yeah, and then like you said, anytime they get more for a restaurant meal, you're crowding out spending elsewhere. Steve, what would you say to watch in terms of, we've got the PC report, I think, this Friday. And the market is kind of jumping way ahead here when it's looking and says, OK, 5 years, we're going to see inflation coming back to a 2% rate. But we're not going to be seeing that this week.
No. Just real quick, to Melissa's point, there is an index called the Sticky Price Index. Maybe Melissa's familiar with it. And it does measure things that are difficult, that don't often come down and don't fluctuate a lot. And the idea is you follow these prices because they're reluctant to go up and they're tough to go back down. So they're ones that are thought to be good future indicators of inflation. And it's been pretty high and staying there. I'm watching that. I'm watching all the data. I'm watching the high frequency data with a big question. I got two questions. One is, do goods prices falling offset continued high service price inflation? And the other question being some of the weakness we're seeing in tech. Tech has been a leader in deflation and disinflation in this economy. I'm wondering if we get a round of price cuts on the tech side that could help some of these aggregate indices.
Wouldn't that be nice?
Very interesting. Yeah.
Deal on our iCloud storage.
And how China's comeback, if there is a big comeback there, will affect
another
production costs and whether they want to regain share that may have fallen away from them. All right. Thanks,
Absolutely.
guys.
Thanks, Steve Leisman. Melissa Repko. Appreciate it very much.